Now, SBF was another person on the show, and barefaced lied to us about who he is and what he does. He was basically telling us he was trying to, put equities on chain and clean up the space and buy these businesses because we need to sort this out and move forwards, when what he was doing was barefaced lying because he'd gone bust.
Hello and welcome back to another episode on the Wealthy Value channel. In today's video, Raoul Pal, a macroeconomy analyst and crypto investor, unpacks the question of what's next for cryptocurrencies after the whole SBF saga and why he remains bullish for cryptos despite the huge negative sentiments cryptocurrencies are currently experiencing.
The bottom of the cycle is always it's a scam, it's a Ponzi, all the media hates it, everybody throws shit at each other online, everybody's looking for blame, looking for scapegoats. We are exactly in that point now. It is ugly out there. And that ugliness out there is a real measure of where we are in the cycle. So we're at the despair and anger phase. And then we have the acceptance phase, which is the boredom phase, which I think we've rolled into, where prices don't do anything for a while and everyone starts getting fed up and moves on elsewhere. You can see artificial intelligence is getting people's attention just when they should be looking at crypto as well. Don't forget, artificial intelligence is not really investable for most of us because it's all VC, while crypto is real-time VC that we can trade, which is part of the magic of it. So we're at the blow-up phase, the FTX scandal. Now, I've seen this. I've seen it with Mt. Gox. I've seen it with Bitfinex. I've seen it every single bloody cycle. And this time around, everyone's like, oh my God, it's the end of the world. Yeah, it's every time the end of the world. And guess what? It's not. It's never the end of the world. People say, well, nobody's ever going to come back into this market. Well, I've been around. I've been around the block a long time. I've been 30 odd years in financial markets, and I've seen this with hedge funds. Long-term capital management, the biggest blow-up of a hedge fund in history. The Fed had to bail out the whole system. What everybody shouted at them, they're a Ponzi, they're a scam, they're over-leveraged. Hedge funds are uninvestable. Net outcome, the net assets of hedge funds went up 5x over the next 7 years. Why? Regulation. Regulation appears to have cleaned up the space, and then people feel much safer to come in because the institutions are waiting. And I've had conversations throughout Raoul's Adventures in Crypto, both with hedge funds like Olaf Carson-Wee, with Jeff Dorman. I've also had it with people like Yuri and Timmer. I've had it with Sandy Call. And everybody tells us the institutions are still looking at this space. So my guess, regulation and an upswing in prices, upswing in global liquidity, and they start coming in a more meaningful way. There tend to be momentum chasers. Also, we saw similar after Madoff. Hedge funds are uninvestable, they're opaque, nobody knows what they're about, nobody's going to ever put money in them again. What happened? I think the hedge fund industry went up another 5x in assets under management. So that's what I'm expecting here. Regulation equals safety, equals green light, equals go. If that coincides with global liquidity, it creates fireworks. And the market has no short positions in. It has no real ability to short unless you want to use Binance. And nobody really wants to use Binance because everyone's a bit scared of who owns it, its opaqueness, even the audits. And so therefore, you've got very few shorts and you've got a massive amount of money coming into the market. And stuff like ETH is deflationary the more volume there is. So the more volume there is, the less ETH's around, the more kind of reflexive in price it is. So I think we're setting up for a super interesting cycle. So I am been buying any money I can find. I'm throwing into crypto, literally in nothing else right now. I'm super focused.
There have been approximately 42% of failed cryptocurrency exchanges that have disappeared without a trace since 2014. The biggest being Mt. Gox, in which a total of 850,000 bitcoins went missing mysteriously in 2014 before the crypto exchange filed for bankruptcy. The Mt. Gox collapse, when compared to FTX, is much bigger, as the total Bitcoin that vanished from the market at that time accounted for about 7% of all Bitcoin supply at the time. In today's value, that would be about $15 billion worth of Bitcoin, about twice the $8 billion that FTX lost. The Mt. Gox collapse had caused the price of Bitcoin to fall by 23%, to reach a low point of $418. In November of 2022, when FTX collapsed, a similar incident played out. Bitcoin had dropped from a $20,400 valuation per coin to about $16,000 within 24 hours of news breaking that the exchange could be in trouble. Somehow, Bitcoin and other cryptocurrencies had always managed to bounce back. Many are asking if this FTX debacle would snowball to the collapse of even major cryptocurrencies such as Bitcoin. Raoul Pal argues that the negative sentiments against cryptocurrencies are not realistic. He predicts that this would only lead to better regulations of cryptocurrencies and supporting services such as crypto exchanges. There is truth to this claim. We've experienced several crypto exchanges' demise, but cryptocurrencies have always rebounded some months after. Will that be the case again after FTX's failure? Interestingly, despite FTX causing many institutional hedge funds and venture capitalists billions of dollars, they're still showing interest in funding cryptocurrency ventures in the future. Most have cited the need for regulations in the market as the only constraints they have holding them back from investing in cryptocurrencies. As a result of the FTX collapse, institutional registrations on Bitstamp's digital asset trading platform increased 57% in November. The exchange's revenue also went up by 45% in the same month, and 34% came from institutional sources.
Let's see how the incumbents, let's see if the XRP lawsuit gets settled. That's going to be interesting too, and I think it cleans a lot of the space up. Regulation. We've had some shitty regulation with the library deal, but we need some clarity. XRP is going to be one of them, and then we'll get a few more tests. Who's going to regulate all of this space? Next big question. Is it going to be Gary Gensler? Is Gary Gensler going to go into a different job? Is Gary Gensler going to lose his job over FTX? Is the CFTC going to get the majority of it? I don't know. We're going to find out. But I know there's a lot of people fighting the fight here. People like Ryan Selkis, Senator Loomis, and a whole bunch of others who are in DC, Brian Armstrong, making sure we get the right rulings and a fairness that the space requires to flourish. The US needs to regulate properly, and the SBF debacle proved that. Now, SBF was another person on the show, and barefaced lied to us about who he is and what he does. He was basically telling us he was trying to, put equities on chain and clean up the space and buy these businesses because we need to sort this out and move forwards, when what he was doing was barefaced lying because he'd gone bust and used customer money. Another extraordinary moment in time in Real Vision history where we get to see that in real time. And, a bloody sad event. But typically, if you're going to build businesses in this space, you need to be regulated if you're going to take people's money. I don't care what you say. Now, DeFi is different because it's written into the smart contract how you get liquidated and how you're dealt with. It cannot be fraudulently manipulated by people. And the SBF thing and the whole Alameda thing was rotten to the core, and we're still just finding out how extremely rotten it was, and an awful situation, but it's done. All the leverage is gone. Every leverage player's gone.
XRP token is facing uncertainty as the case between the issuing company, Ripple, and the Security Exchange Commission, SEC, is still to be determined by the courts. Speculations about the outcome of this lawsuit probably caused a suspicious transfer of 267,413,843 XRP tokens worth about $97,775,558 US, as reported by Whale Alert on the 16th of December on Twitter. Is this a sign that the judgment is likely to go against the cryptocurrency company? It was previously rumored that Ripple would enter a settlement with the SEC on the 15th of December, but this rumor has since been proven false. David Gokhshtein, founder of Gokhshtein Media, took to his Twitter account to ask what was going on with the settlement that was being anticipated. It's apparent we have to keep waiting. Whatever the outcome, this is going to have a huge impact on the future of cryptocurrencies. Cryptocurrency advocates have to work overtime to salvage what's left of the reputation that the industry has. At the forefront of this recovery process are Coinbase's Brian Armstrong and Messari's Ryan Selkis. The two crypto CEOs admit that SBF has set progressive crypto regulations back. Ryan Selkis, founder and CEO of crypto market intelligence company Messari, said in a Twitter dialogue that the conversation has shifted from progressing on regulations to managing the mess Sam Bankman-Fried has left for them. Even though Raoul Pal is still bullish for cryptos, the future seems uncertain at present. But what do you guys think? Let us know in the comments below, and as always, be sure to like this video and subscribe to the channel for more. Thanks for watching, and we'll see you in the next one.